In 2020, I purchased 62 tax return clients. As of December 2024, that investment has generated a staggering 934% return on investment. That's like 9 times what I might have earned investing in the S&P 500. This may be the best investment I will ever make. In this video, I'll walk you through how the deal came to be, how I executed it, and the ROI calculations. Stick around until the end for a Q&A session featuring questions from X and LinkedIn. Thank you to Financial Sense for sponsoring this video. Before starting my firm, I worked as the tax director for a small CPA firm. I was brought on to run their tax department with the option to buy in to the partnership if specific metrics were hit. There was nothing more attractive to me than business ownership. It's an effective carrot to dangle in front of employees to get them to stick around. And it also seems like that carrot is the source of a lot of shattered hopes and dreams. After about 2 years at this firm, I was offered to buy the firm as the current partners were pivoting to their other accounting business that worked exclusively with churches. The full story is covered in another video, but in short, I hesitated and got scared during initial negotiations and took another job, which didn't work out, and had to come back and try to salvage what was left of the deal I nuked. The partners were gracious towards my situation when they didn't have to be, and gave me very good terms for a buyout. The deal ended up where I would work as a contractor in 2020, servicing all of the firm's tax clients, and I would get paid 79% of all the revenue that I worked on, with the first right of refusal to buy the clients that I serviced for 50% of what I billed. So if I worked on a tax return that had a $1,000 fee, I was paid $790 for working on it. I would then be able to purchase that client for $500. Here's the kicker. Any clients that I brought on during the 2020 tax season, I didn't have to pay for. But if I didn't take the deal, the firm would keep those clients for free. I ended up adding about 60 clients between January and September, which doesn't seem real because that's 60 new client meetings. I don't think there was any other time in my career where I was as productive compared to the first half of 2020. There was so much focus on adding whoever came through the door and doing the work. I was in a dimly lit office with no windows and no decorations, just me, 2 monitors, and a drive to survive until it was time to finalize the deal and launch my firm. Oh, and let's not forget a global pandemic broke out, causing a little anxiety over if the world economy was going to collapse. But COVID was probably the top reason why I was able to add so many clients. We got automatic extended tax deadlines, so I had plenty of time to meet with new clients and work on tax returns. I don't think I was working more than 40 hours a week. Ironically, it was one of the best years for my work-life balance. Speaking of work-life balance, let's talk about our sponsor, Financial Sense. Financial Sense is the all-in-one practice management tool that's perfect for tax, accounting, and bookkeeping firms. With Financial Sense, you can manage your workflows, track client deadlines, and keep your entire team on the same page. But here's the big news. They've launched a brand new billing feature. Now you can send invoices, track payments, and manage all your billing in one place. No more chasing down payments or juggling multiple tools. Thousands of firms like Don Brolin's Powerful Accounting and Roman Villard's Full Send Finance are already using Financial Sense to simplify their operations, grow faster, and keep their clients happy. If you're ready to take the stress out of running your firm, check them out at the link below and tell them I sent you, and you'll get 10% off the annual price on their team or scale plan. Did I mention they have a solo plan for just $19 a month? Check them out. Back to the deal I made. Around the end of summer, we determined what clients I would buy and for how much. I got to reject a handful of clients due to them not being a good fit. The purchase price ended up being $16,500. The average tax return fee was about $500. I was given the option to finance the deal through the sellers with a 1-year, 2-year, or 3-year payment plan. There wasn't an interest rate, but instead a $2,500 increase in price with each extra year to pay. It was actually really fair terms. I ended up paying 100% upfront because my sister loaned me the money so I wouldn't have to pay the extra financing costs. I paid off the loan for my sister in April 2023, by the way. Thanks, Jolie. We didn't need the loan, but it helped us keep more money in the bank ready to be deployed if needed. Keep in mind, my wife was a stay-at-home mom and we didn't have that much savings. Not bad, right? The purchase price ended up being about 75% of the revenue generated from the clients from that year, if you include the amount the seller kept that I billed out. Now's a good time to mention who the seller was. They currently operate an accounting firm for churches and have currently crossed the 1 million in annual recurring revenue. I'll share a link to some of their stuff. They are awesome people and do great work for churches. I wouldn't be here without them working out a deal with me. You may see on socials that the norm for buying accounting firms is 1 or 1.5x annual revenue. Here's the thing. I was buying clients, which was basically buying a job. I had refined all the processes and systems the clients were operating under. There was no employee that came with the clients to do the work. There was no retention clawback. All of those factors are why I originally pushed for a 0.5 multiple for purchasing the clients. It would have been different if there was a provision to not have to pay for clients that left before tax season started, or if I was able to transfer over all of the software logins and had an employee to help with the work. That would warrant a higher price. I still think I got a really fair deal and both parties were satisfied. What happened after the purchase? Well, I transitioned the clients over to my firm, and since I helped design all the systems and workflows at the previous firm, I really only had to give the clients a new login to the same portal they were used to using. For the first year, I didn't increase the pricing on any clients that I had added from the previous firm or the clients that I bought. Don't hurt me. I did this in hopes they would stick around and also because of COVID. I didn't want to increase prices on people since the economy was in such an unknown condition. Some clients did end up leaving before the following tax season that I paid for. But that wasn't actually a bad thing. It was expected because there's always going to be churn. Also, it freed up space for higher paying clients. 2 years into running my firm, I implemented significant price increases, primarily for clients I had acquired from the previous firm. While it was a painful decision, it was necessary for the growth and sustainability of my business. And a lot of clients left as a result. But I ended up making more money and working less, and that's been the case every year after. One of the reasons why I made this video was because I calculated the ROI on the clients that I bought and was shocked at how much it really was, because there aren't that many OG clients left. That's the power of price increases and expanding your service offerings. Before I realized my 934% ROI on the clients I bought, I was for growing your book of business from scratch and not buying a firm or clients, because there are so many clients looking for accountants these days. While I still believe in the ability to grow a firm really fast, having instant cash flow and not having to grind 100 new client meetings in a year is pretty appealing. So how did I come up with the 934% ROI number? Keep in mind, I'm an accountant and only took like one finance class. Did you ever have a professor that said finance instead of finance? Consider yourself blessed if you haven't. Okay, so I went into my accounting software and pulled a report called Income by Customer. I made the date range from the beginning of my firm until December 2024. Then filtered out all the clients that I didn't purchase. I was left with all the income that I've made over the last 4 years from the clients that I bought. Now, even though some of the clients that I bought were only buying tax services from me at the beginning, I was able to get them to buy other services like monthly accounting, or I upsold them on tax planning or converted some to S corporations, or some started businesses and bought rental properties. Just to mention again, about 2 years after the purchase, I had to create some capacity and get the clients that I started with close to the market rate for the fees I was charging for new clients. This made a decent amount of clients leave because in some cases, I was raising the annual fee by almost 100%. The clients that are still with me today are paying me much more than 4 years ago and are buying more services. That's how I was able to achieve a 934% ROI in 4 years. Suck it, Bitcoin. I actually don't know if Bitcoin would have returned a higher ROI or not, but let's just pretend it did. Before we get to the Q&A time, I have to mention my community for aspiring and new accounting firm owners called Counter, where bold accountants break the mold and build thriving firms. We have several live events every month to help upskill you. There's also lots of spaces for discussion, like what tech stack to use and sharing the ups and downs of running a business. Q&A time. Would you do another one? Not at the moment, but if I really dial in my tech stack to allow for scaling, I would love to do another one. How have you built your new client pipeline? Through having the right connections that send me referrals. I'm actually wanting to try out marketing for the first time in 2025. Where do your best clients come from? A lot of them are actually from the list that I bought, believe it or not. Did they bring in more customers / act as referrals? Yes, they do act as referrals, and they probably would bring in more referrals if I asked. Does this make more sense when first starting out? It really depends on your situation, how long you want to grind, how much access to capital you have, and how much savings do you have. And obviously, I think it makes sense. Must it be off market? Given firms / books sell 1x revenue on market, you can probably get a better deal if it's off market. Start building relationships with firm owners that want to retire in the next 5 to 10 years. Where would you source deals? Start local with networking groups and then expand your search. How much were you spending on health insurance then and now? Like around $500 a month back then, and now it's about $800 a month. Did you have 6 months of savings after the purchase? Yes. Barely. How much of your success do you attribute to your unique charisma, riz, and style shown on your videos? I wish I could say 100%, but a lot of it is just being in the right place at the right time, with God's hand giving me nudges along the way. Were you always quirky and a showman? Fun fact, I used to own the circuit of elementary school talent shows back in the day. It's so weird how I hate and love attention at the same time. Buying an established firm versus a book if you don't have one already. Sometimes there's not really a difference between the two. It all depends, again, on what the situation is. Best practices after buying the book. Lots of communication. Make it easy to transition when it comes to software, and explain how they will benefit from the acquisition. Thank you for watching and sticking around until the end. I truly appreciate you and your support. If you found this helpful, don't forget to subscribe. Also, check out my community counter where new firm owners collaborate, share resources, and build better businesses together. See you next time.